Global stock markets have fallen for a second day in response to the tariffs announced on Wednesday by US President Donald Trump. In an escalation of the global trade war, China has retaliated with the imposition of 34% tariffs on US goods. President Trump accused the Chinese of panicking and vowed that his policies will never change.
Chinese state TV breaking the news that the global trade war had entered a new and worrying phase. China has announced additional tariffs of 34% on US goods. The retaliation also includes controls on the exports of rare earth minerals and the filing of a lawsuit with the World Trade Organization. Posting on his Truth social media platform, US President Donald Trump said China had played it wrong and that they had panicked. When it comes to a European retaliation, there are fears that the EU could target US technology firms. Most of them have significant operations here.
Ireland does not want the EU to go after US big tech. That's the bottom line.
I completely understand that, and the EU has not said it's going after big tech.
But the big guys in the EU said it very clearly yesterday, you know, straight out of the blocks, France and Germany.
And different countries will put forward ideas and proposals that maybe suit their national interests. We sit in the European Commission, where we have sight of all of Europe.
Stock markets and global oil prices fell again today over fears of a worsening trade war. Irish share prices were also hit today, with the Isaac Index suffering losses. Banking stocks were among the worst affected. US stock markets were sharply lower again after yesterday suffering their worst falls since the COVID pandemic. President Trump today called on the US Federal Reserve Chair to cut interest rates, but instead he issued a warning that the new tariffs could hit employment, inflation and economic growth.
It is now becoming clear that tariff increases will be significantly larger than expected. And the same is likely to be true of the economic effects, which will include higher inflation and slower growth. The size and duration of these effects remains uncertain.
But amid all the turmoil, Donald Trump today posted a message to those investing in the US saying that this is a great time to get rich and that his policies will never change. Brian O'Donovan, RTE News.
Here, unions have called for the government to rule out tax cuts in the near term and to introduce sector-specific supports if workers are affected by US tariffs. The government held high-level meetings between ministers, employers, unions and public agencies today.
Government buildings was the venue today for high-level meetings to discuss the impact of Donald Trump's 20% tariffs on Ireland and the risk further tariffs are on the way. The first meeting, the Labour Employer Economic Forum, heard a clear message from unions to ministers.
We need a bespoke, specific pay-related unemployment benefit for these sectors that will be disproportionately affected. I think we need to rule out tax cuts over the next period. I think the VAT thing needs to be shelved. It was never sensible. It's not affordable now. And then I think in the long term, we need to, whilst US FDI has been very welcome, it's been good for Irish workers, good for business, good for the economy. We need to wean our disproportionate reliance on it off.
Although some take hope the US president could change course based on market reaction to his tariff plan so far, employers say exposed companies and workers will begin to feel the effects almost immediately. They too want supports to be made available.
There are some sectors very exposed, particularly in the consumer space, so the drinks industry will be impacted quite immediately. They'll have consequences then, obviously, for their employees, and that's why we're talking to the government about having supports immediately.
There isn't any scheme, the benefit of which would outweigh progress that we could make in terms of getting to a better place with tariffs in the days and weeks ahead. And that's what our focus as a government should rightly be on.
The Taoiseach said today the EU has a difficult task to take the interests of all member states into account when framing a response to the US tariffs, and it must be done in a way that does not bring any more damage. He also said it's far too early to be specific on whether commitments made in the programme for government might be delayed because of the economic uncertainty. Joe McGraley, RTE News.
Well, let's get some analysis of all this with Europe editor Tony Connolly and Washington correspondent Sean Whelan. Tony, stock market turmoil all around the world, including Europe, the FTSE biggest loss since COVID times. We've seen the Chinese reaction. How is the EU response coming along?
Well, David, one worry the EU has in relation to China is that those tariffs are so big on China and Vietnam that they're worried about China and Vietnam dumping or flooding the European market with electrical goods, for example. So the EU may now have to put up a tariff wall against that. On the EU's response, they're still only talking in detail about responding to the 25% tariffs on aluminium and steel, and trade ministers on Monday in Luxembourg, including Simon Harris, will discuss that particular issue, and we'll get a vote on 26 billion worth of European tariffs on US products by next Wednesday. Maroš Šefčovič, the EU Trade Commissioner, he is due to speak by telephone to his US counterparts this evening, if he hasn't done already. And there is a sense, I think, in Brussels that the Trump administration simply wasn't interested in negotiating before the announcement, the so-called Liberation Day announcement on Wednesday night. And now the door may be open. But the question is, will the Trump administration be open to negotiation? There is a view in Brussels that the EU should bide its time and wait for the very negative reaction of the markets and business sentiment, and even a division now within the Republican Party in the United States, to take effect, possibly to soften up the Trump administration before getting into negotiations proper. But we're just not at that moment right now.
OK, well, that opens me up for my question to you, Sean. The President says his policies will never change. Should we believe him?
Good question, David. I mean, yesterday on the plane down to Florida, he was telling reporters that it was in everybody's interest to start negotiating deals and trying to negotiate away these tariffs. But now today he's saying they're not going to change. And prior to yesterday, his cabinet secretaries had been going around telling people it's not going to change. You just have to deal with a new reality. So we're just going to have to wait and see. And referring to what Tony was saying there about Brussels' approach, it is going to have to be a wait-and-see approach, and that was very much evident in the approach taken by Jerome Powell, the Fed chairman, when he spoke this morning here in Washington, talking about the impacts that these tariffs could have, saying they are going to push up inflation, they are going to push up unemployment, they are going to push up business uncertainty, they're going to push up costs on the economy generally. He was also saying we're not going to be rushed into making any decisions on cutting interest rates. We have to wait and see how this starts to play out in the real economy over time. So, excuse me, investors, policymakers are going to have to wait and see. There's no point rushing into things. The Chinese have made their move now. Donald Trump taking to social media today saying the Chinese panicked. They made exactly the wrong move. And again, that's the type of rhetoric that we've come to expect from him and others in the administration in recent days, saying don't jump into this, don't panic, don't increase tariffs, don't retaliate, because then we will retaliate more. And again, the Federal Reserve Chairman saying today, we have to wait and see if this effect of tariffs is a one-off that raises costs in the economy, or if we get into multiple incidences of inflationary increases in the economy. And that suggests he's waiting to see if other countries do impose retaliatory tariffs, particularly the big players like the EU and China, and if the US responds in kind and escalates the tariff war.
Just how bad is that turmoil on the markets, and what does it all mean? We're joined from Chicago by Ethan Devitt, Senior Investment Advisor with Moneta in the city. Ethan, thanks indeed for joining us this evening. We've been talking about market turmoil all day. I think that's a polite way of describing it. What's going on at the moment?
What we're feeling here is definitely a sense of shock. I think despite the fact that tariffs were forecast and we knew about them in the election propaganda, so to speak, we did not expect them to be as severe, as sweeping and as sudden as what we saw in the Rose Garden just 2 days ago. It has been, I think, a series of dealing with this narrative of US exceptionalism, now being turned into a kind of US verticalization, the sense of US being an island, the sense of deglobalization, all of these large-scale changes that are likely to now, we are trying to really discount that into markets and cope with it. I'd say it is a definite sense of turmoil here on the ground. OK, and is the stock market turmoil enough, do you think, to force a change of approach from the White House? Well, we've been talking about the Trump thought for some time, asking what level it was at, whether there was likely to be a sense that he could not tolerate perhaps this market volatility. I think what we're seeing is there has always been a sense of fighting mentality within the Trump administration. This has come from the campaign trail. There was a sense of fighting with perhaps other leaders around the world. And now is the fight with the market. There does seem to be strongman tactics at play. We've seen some pretty stark all-caps rhetoric coming out of the White House today around China, say that this was a sense of panic, their retaliation. And I would think that maybe Trump does feel that there can be a fight with the markets, and we will see who's standing left at the end of the day. The only positive news we've seen today is around the employment numbers. The markets have been very resilient up to now. That has been the story of the last 18 months, just how resilient markets have been despite all the stresses, the rising rates, and potential slowdown in demand that we thought was on the horizon. We never saw that recession that was forecast. The resilience is still there at a fundamental level, but employment is a lagging indicator. So we don't know yet what is in store for the next quarter. And I can guarantee that we will not be looking at those kind of rosy indicators if the current market conditions play out.
OK, so as you mentioned, we've seen the Chinese response, quite a stark one, a very quick one. The EU is still considering what it should do in return. Should it follow China with a very quick hit, or is it better to be calm in its response to President Trump?
Well, there's been a lot of advice as to what to do. Get in first in line for the negotiation. Do nothing. That was what Scott Bessent advised. Be calm. Take a breather. I think what is certain is that whatever the response is, it needs to be one that is done with conviction, no wavering. There has to be a strong response. We've seen that from Canada, a strong response. We originally saw that from Mexico. And now from China, I think that is the only response that can happen, is one that is unwavering. The challenge with Europe, of course, is that different economies are dependent on the US in very different ways. The Irish economy being very dependent on pharmaceutical exports, and that could have a dramatic effect on Irish GDP were there to be tariffs imposed there. So not every economy within the EU is likely to treat tariffs in the same way. So that makes the response a little bit more complex. But I would say consider it and be definitive and with high conviction, whatever that is. OK,
and finally, Aoife, is this all a negotiating ploy by President Trump? Does he really want tariffs, or does he want to make a deal?
I love that gets to the question you asked before about what is the level at which this will simply be too much. We've seen a lot of wavering in the past, and that has not helped markets at all. They have not enjoyed that uncertainty. We've had a pretty nasty first quarter in markets, the worst since 2022. So when we look at that, we have to say, is this uncertainty helping matters? Is this part of the art of the deal? It seems to be a pretty severe way to start. Suggestion that there could be even escalation from here, when, as I mentioned, these were the worst case scenario. So we would have expected maybe some kind of claw back from here. I don't think this is a negotiating tactic at this point. This is really living and breathing what Donald Trump's philosophy has been for decades. And we are looking at ambitions to restructure the world trade order. And this is something that markets have not expected. They've expected more of the same. So we will be grappling with this. And what we see the second day of market downturn is, I think, a reflection of this shock percolating through.
OK, Aoife Devitt, Senior Investment Advisor with Moneta. Thank you indeed for joining us in Chicago.
Thank you.